Good evening. Today is Thursday, March 21st, 2013, and the time is 8:10 p.m. Tonight we will be holding a meeting where we will be talking about the company HAMROS. Our group presenting is as follows: Jennifer Sanchez, Selena Hernandez, Maggie Zhuang, Rafael Ortiz Jr., Alan Van, and Ronald Williams Jr. My name is Ronald Williams Jr., and I am the VP of Operations, and I will be discussing the major achievements of HAMROS. Over the past 2 years, HAMROS has made several major achievements in its business operation to increase its success and profitability. Their first achievement has been their ability to achieve creating a strongly differentiated product that is also cost advantageous over rivals. This strength of differentiated production has led to the company's edge in profitability. Next, by decreasing selling and administration expenses, HAMROS was able to achieve expanding into new geographic markets and thus increasing buyer demand for their products, thus giving HAMROS wide geographic appeal. The last major achievement HAMROS was able to implement was a successful investment strategy. As busy sales quarters approached, HAMROS would hire one new salesperson to accommodate the high demand. HAMROS decided that investments in advertising should also be upheld every 2 quarters to accommodate historical heavy sales quarters. Next, the next person presenting will now be Rafael.
Hi, my name is Rafael Ortiz, and I am the CMO of HAMROS, and I'll be talking about the strengths. A couple of strengths to point out for HAMROS is their unit production cost. After investing a lot in research and development and training, they were able to decrease their cost to $2.28, which gives them a decrease of 47.5% per unit, which was actually very beneficial for HAMROS because they were able to increase the prices and increase profit, especially since the average range was about $5 in the industry. Also, another strength is a product that is strongly differentiate from those of rivals. They were able, with all the investment they spent on research and development, they were able to create new products that consumers kept purchasing. After continuously increasing the prices, those products were still selling, which gives HAMROS a good brand image to their consumers. Also, the weaknesses that we'll be discussing are, during year 6, they went through a couple of problems by simply not producing the maximum output. They were not producing 15% accordingly to what needed to be present. This hurt them badly, especially because their market share dropped 3.32%. Because of this incident, Company 4 was able to take sales that pretty much belonged to HAMROS. Also, a couple of weaknesses that I also want to point out is that by us decreasing on the output and pretty much stocking out, most of the employees became impatient and resigned. This brought more expenses for training new employees. And the next presenter will be Selena.
Hi, I am the Chief Operation Officer, and I will be talking about the opportunities and threats for our company. The increased buyer demand for the products. Because we want to create a high demand for our products, we can raise the advertisement and commission rates. For the commission rate, since we have been losing a lot of sales personnel and spending money on training them, we can raise the price for the commission rate. The new plant, if we create more plants in the upcoming years, we can most likely meet our customer needs. As far as the threats, loss of sales to substitute products. For example, Company 2 had a bad quarter and they lost about 17% of their market share. So others took advantage and consumed their market share. This can also happen to us if we don't create new products to meet our customers' needs. The stock out, if we continue to stock out, we can lose our market share and eventually go negative in next quarter net income. Next will be Maggie talking about performance targets.
Hi, I'm the CFO of the HAMROS. Overall, in year 5, our actual results were as good as our performance targets. Fortunately, we did much better than we expected in year 6. Our actual return on assets was 37.84%, which was 28.05% higher than the plan. The primary reasons was actually we had a huge increase in total net income. Our actual return on equity was 58.58%, which was 44.7% higher than the performance target. Besides the similar reason with the ROA, we also bought back more common stock than we planned to do. As the same reasons, our actual stock price was $4.51 higher than we expected. However, our actual market share was 3.32%, lower than we expected 25% due to lack of production capabilities. Our actual unit production cost was $2.28 lower than the performance target. The main reasons was the foreign exchange rate from 11.83 as expected to 28.43 actually. We also changed our model futures to a lower level. Due to the low unit production cost, our actual total net income was increased 4.5 million compared to our performance targets. Next presenter is Aaron.
Hi, I'm a VP Accounting HAMROS. The comparison for the E5 and the E6 between the HAMROS and the industry average of the ROA, ROE, and market share, stock price, UPC, and total net income. That we are almost above the industry average, except the E5 stock price are below. And we are going to present the three main things are the UPC and the total net income and stock price. The first is UPC. We have a related the low unit production cost is shorter because we were the only one who built a plant in the CSULA compared to the industry. So we consider that we could make the low material cost and the labor cost since we moved the plant from the US to the CSULA. And we have the advantage for the foreign exchange rate increasing dramatically. In addition, the company one have the highest UPC since they have the high model and quality feature. Therefore, we train out the model and quality and feature to the lower step in E6. So we have the lowest UPC in the industry, which were $2.97% lower than the industry average. The next one, we ranked the second in our total net income in E5 and the first in the E6 by the compared to the industry. Now, there were certain factors that affect our outcome. The main reason was we have the lowest unit production cost, so we have the other income which come from the CD interested, and the other company they did not. So furthermore, we have the highest sale price and the market share were higher than the industry average. So as a result, we have the highest total net income in the industry, which was 27 times higher than the industry average. The last one, we compare the stock price with the industry average of the $1.27 and the $2.21 for the E5 and the E6. So our stock price E5 is only 92 cents. That is also below than the industry average, about 35 cents. But in E6, our stock price keep increasing and jump up from the 92 cents in E5 to the $6.15 in E6, and reaching to the top of the other company and above than the industry about $3.95. And like we say, we declare at above the exchange rate increasing and the unit production cost and the lows and the high net income, so we can get a high return from the stock price, and also we project part of the out stock. And the next speaker is Selena.
I'm Selena, and I'll be talking about the operation production strategies. In the year 5, HAMROS had estimated to spend $865 in research and development. The actual output was $1180. HAMROS spent more on R&D than estimated due to the effort of trying to release Model 5 before other companies. The model that HAMROS ended up releasing was Model 4 in quarter 3. The total training expense exceeded our planned expectations due to a hard push in hiring as much sales personnel to create more sales, which would increase income for HAMROS to have enough funds that would pay for the plant extension of 2 additional lines. In the year 6, HAMROS had Model 6 available in the beginning of the year, which was an advantage for HAMROS since they were just releasing Model 5. This gave HAMROS an opportunity to cut costs and invest more in training. It was also a great way to have more cash on hand for future expansions or projects. The total training cost slightly increased according to the planned expense, since HAMROS had to transfer an employee to America 2. Next will be Rafael Ortiz.
Hi, I'm Rafael Ortiz, and I'll be talking about the marketing strategies. The advertisement expense, we went as accordingly. We did not want to increase our marketing expense simply because a lot of companies were investing more than us, and HAMROS felt like they're doing marketing for the product, so we can just simply take their sales by offering a better product once they enter the store. The commission rate in year 5, we went accordingly to what we had planned. We increased it in year 6 simply because we increased the product prices. One of the reasons why we increased the product prices was we weren't generating as much income as we thought we were. Also, by increasing the product price, we were able to increase our sales for future projects. Also, the number of salespeople went accordingly in year 5. Due to the out of stock we had early year 6, a couple of salespeople resigned, which not ultimately affected the company, but we definitely need to hire more sales personnel to increase our sales. That concludes my side, and the next presenter will be Jennifer.
Thank you, Rafael. Hi, everybody. I'm Jennifer Sanchez, the CEO of HAMROS. So we'll finish off this meeting with the action plan for year 7 and beyond. So for our plant expansion, our production capacity investments, we made a good decision in moving the manufacturing plant to Sereno. It was a really successful one. Now, due to this success, it has now reached its production capacity. In order to meet our growing customer needs, the plan is to invest in a manufacturing plant in our home area, America 3, with 6 assembly lines and a first shift of 40 hours. In regards to our salespeople, their expectation and their capability is to sell 8,000 units per market area. Now, with that assumption, the hiring strategy will involve hiring 1 salesperson per area before the busy sales quarters begin, which are 2 and 4. Our research and development section. HAMROS relies on a research and development department to create and design new products as well as improve our existing products. HAMROS is ready to launch Model 6, which is expected to bring profitable income. Dividends. HAMROS will not pay out dividends in year 7. Instead, the plan is to pay out 20% of our total earnings in year 8. So thank you all for attending today's meeting. The strategies that were described today are designed to maintain HAMROS' position as one of the leaders of our industry. So again, I thank you for attending tonight's meeting. I hope you all enjoyed all the information that we presented, and we are looking forward to a bright future, for we have many things to consider. Thank you.